Good morning. Welcome to Stock Chartistry's weekend pre-market update. Today is January the 20th and it's 6:30 in the morning. Before we get started on some charts, let's take a quick look at what happened last week. We're heading into Martin Luther King Day. Obviously, we were off yesterday. The Russell small caps had an incredible week last week, beating the S&P for 10 consecutive sessions. Meanwhile, the generals, big tech, they were faltering, and rotation is occurring as a backdrop. As rising bonds and the 10-year yield was breaking out of consolidation pattern. Also last week we had bank earnings, and actually JP Morgan initially shot up, was the very first move, and a lot of times people say the first move is the wrong move, and you can see from my notes right here that eventually it fell off like 4%. So the gains never seem to be being held. It was the exact same situation with Taiwan Semiconductor. Had excellent results, gapped up on the pre-market on Thursday, and as soon as the market opened, the regular trading session, they made the whales made whoever was buying those that pay, and not just for Taiwan Semiconductor, but for the entire semiconductor trade. Economic data that came out last week, CPI was pretty tame. The Fed and DOJ reports surfaced documents that they're going to have the DOJ, that the Fed's going to be subpoenaed. That was really like a non-issue as far as the market goes. But this was an issue. I think this actually drove the market a little back a little bit on Thursday. The geopolitics of Iran and Venezuela and crude oil. Taking a top-down look in the markets now. The S&P is kind of in a consolidating and choppy range. Bull case is 6,900 or 690 as a launch pad. The bear case is if it gets down below $680 for the S&P, it's going to open the door to a multi-week correction probably. The NASDAQ continues to be weak, and it's now closed below a trend line on Friday, and actually as of today, it's actually even below that. So, and the Russell, this is the status of trash rising to the top. Small caps were outperforming massively. This highly indebted companies lead the quality lags. It signals a late stage or rally or a blow off top, which interestingly enough, we have a gap down from last night, which I'll talk about in just a second. So the IWM levels are overextended, and the pullback should be testing very soon. In fact, it's testing as of the day. The sectors we have, XLK and communications are lagging. The Mag 7 has been broken. The uptrend has broken its uptrend to the S&P. The strength now is actually in the defensive sectors, utilities, real estate, and materials, and industrials seeing some inflows. And bonds are, the 10-year broke out of a massive bull flag, and that could signal a real problem here moving forward in the very near term. Talking about individual stock levels, speaking about NVIDIA has been in a, speaking about individual stock levels, NVIDIA has been in a range, and it's got support at 175, 185, and resistance at between 190 and 195. It broke out last week with the semis, but it could not take 190 and once again faltered. And as of today, it's trading down around 180. Tesla has that $500 psychological range. It continues to go towards that level, but gets rejected. It has a buy support wall at between 430 and 450. Netflix is dead money. The stock's bleeding lower, but it's really not massively dropping. So it is actually something that I'm looking at as a possible turnaround play. And then Apple continues to deteriorate, and Micron is strong, but it's actually hitting trend resistance, and it's very possible it could have a pullback off of its upper channel. Now let's go ahead and look at some charts. All right, we'll take a look at the broad markets right now. You have the ES right here, and then you have the NQ and the Dow, and then the Russell on top. On the bottom, we have Bitcoin, gold, crude oil, and bonds. You take a look, you can see very easily that we had a massive drop off yesterday. And this is because Trump has threatened tariffs against several EU countries due to his position on wanting to acquire Greenland. And so this has actually had an amazing drop off. You can see bonds have dropped off significantly as well. Honestly, these tariff types of talks have been buying opportunities in the past, so it's definitely, but the market's also been weak and it's been looking for a reason to pull back. So we're right now, we're overbought in the SPY. You take a look at the SPY right here, it's actually hitting its 200 period moving average for the 8-hour chart, and it's bounced off of that at this time. So I'm going to use yellow for my color for highlighting. And you have, you can see that the NQ is actually, once again, it's weaker than the SPY, and it's also obviously have this downtrend, but here's the 200-day. It hasn't even reached back up to it, and it's actually following the 5-period moving average. So it's not a good look for the tech companies. And once again, gold continues to dominate and move up. But once again, it does look to me like, well, it's somewhat of a channel. It might be a little bit of a bearish rising wedge, but it's also, at the very least, it's at the top of the channel. So it's something to actually watch. Lately, the way the market's been trading, and the regular hours traders have made the pre-market traders pay. So that's something to take into consideration. Let's go ahead and dive a little bit deeper into the SPY. We take a look here at the SPY on the 4-hour chart. You can see that one of the things that's really interesting to me is that I can see that the moving averages are stacked. That's something that is available for me inside of my labels that I have, custom labels that I've built for Thinkorswim. Also, we've gapped down here to this trend line, or to this resistance line right here, and we've found a bounce right there. We also got a snapback low right here on that, which means that it's just moved so far so fast that eventually it probably has to have a little bit of a snapback. Now, snapback low does not automatically mean that you're going to move up. A lot of times what it means is that you're actually going to have a little bit of a bounce, and if it's a weak market, you're going to see it end up going lower. So that's something to think about. If you end up losing this 679 area here, the next area is right around here, which is 675, and then 670 for the spot. So we need to, if you're going to be bullish on this market, at least on the regular trading hours, you're going to want to see it capture this 680. 679 area, maybe retest it, and then move up. You got a lot of problems. This chart has got a lot of work to do to actually get to the bullish side. This is going to be very choppy consolidation through here. So trying to trade the upside on this is really only good for a day trade. Now let's take a quick look at the Mag 7. You can see that I've changed my screen here on the left-hand side to show the Mag 7 stocks, and here it is in my dashboard. This column, it starts with the column here, which is the 15-minute, the 1 hour, the 4 hour, the daily, and then the weekly, and that's where you get this dashboard from, showing how price action is actually working. The stock that's actually getting hit the hardest right now in the pre-market is Amazon, as you can see, and then Google, which were actually on the winners list. And then Apple, which has been just terrible, and Microsoft and Meta have been equally terrible. They're actually at the top of the list in regards to the least pullback. That doesn't mean that they're buys. Actually, probably be looking at really interested in Google and possibly Amazon in regards to what's going to happen on the open. So those would probably definitely make my list. Let's take a look at each one of these individually. Apple is outperforming the SPY as we speak right now, and all the other Mag 7 stocks are underperforming the SPY. Once again, it was a massive gap down due to the tariffs that Trump has talked about having today. So we look here at Apple. You have the 15-minute chart right here, then the 1 hour chart here, 4 hour. This is an 8-hour chart rather than a daily chart, so that I can show today's movement. And then we have a weekly chart to give us this is the weekly chart right here, give us a quick overview of exactly where we're at. Take a look at Apple on the 4-hour chart. You can see that we were in a consolidation range through here for several days. And with this news with Apple, it has now broke down. It looks like your next area is right around here for support if it continues to hold this breakdown. And it's very possible it is going to hold the breakdown, because we got a lot of trading activity right through this entire area if you look at this. So you have this range right here, and then this range right here. So breaking now back up above that is going to be somewhat difficult. But also, Apple continues to have all of these consolidation areas. It's really a tough stock to actually kind of trade for runs. Although we do have, if you get above this area right here, right, you do have a pocket where where it had kind of like shot down, that you could work the upside right here. So it is definitely something to consider, but it's really not going to be on my list of stocks to trade today. Taking a look at Microsoft, let's stick with the 4-hour chart. You can see that it's underneath of all the moving averages. It also is stacked. That means that the moving averages are stacked against it. It has a similar pattern to Apple. It's actually reached my first measured move of some analysis that I was doing before. And I have a second measured move, as you can see right down through here. So if we lose this line right here, it's a very good chance that this may end up moving into this area right through here and strike my second measured move right here. It has a ton of work to do, just like every one of the Mag 7 stocks. NVIDIA has just been in this massive consolidation since basically August or October, right through here. If you look at that, huge amount of consolidation. It also has what I've shown in some of my other videos as a head and shoulders possibility. That head and shoulders signifies falling into a range somewhere around this area. So it's not a good look, but the fact that you just have so much trading that's happening through here, it's very choppy. It's hard to actually get a very good run on this as well. It's now back testing a breakout that it had here on the daily downtrend line, and it's also at the bottom of a channel that it had right through here. And then there's another breakout right here that happened. It's already back tested that twice. This stock here is a very weak stock, but we did get a snapback low. It's now retesting the snapback low. It loses this 180. The next area of support is about 179.5, and then from there is 170. Well, could possibly pick up some support right through this area right here, which is 175. It seems to trade in 5-point ranges. So get down below 180, 175 is a definite possibility. Get down below 175, 170 is a definite possibility. Around 170, I think this thing is going to begin to become interesting. I'm not sure that an entire head and shoulders move is going to actually play out on this stock. Looking at Meta, I've actually traded Meta short a couple of times and made some money on this move. Meta really seems like it wants to go back here and retest this low right here around 583. And it's just like all the other stocks, it's gapped down, and the moving averages on the 4-hour chart are stacked to the low side. It has a very weak RSI, so that's oversold. But when I say something's oversold, it's actually a sell signal if it's below the 5-period moving average. So if you take a look here, if we actually add the 5-period moving average to this moving averages, you can see that it's actually well below the 5-period moving average. It'll probably come back and test the 5-period, and usually the first test is a failure, and then it goes down below. So we probably have a test on the 5-period and then a move back below. So this definitely should be on your short list. Meta has been weak stock for a while. On top of that, it's involved with the 5-period 5-wave move down and the Elliott wave analysis. All right, let's talk about Tesla now. You can see that Tesla has lost its weekly trend, or not weekly, but daily. I use blue for daily. So it's lost this daily trend line here on the 4-hour chart. And it also has a snapback low. It has the moving averages on it is stacked as well. The RSI is very weak. It's riding the 5-period moving average down. If it loses this snapback low right through here, this is definitely another looking like it's wanting to take another leg down. And let's go ahead and zoom into this chart now to get a better look at what our numbers are. All right, so let's zoom into Tesla and take a look at the numbers here. We got a snapback low around 422. We got a pivot low around 425. We want to carry this level right here. Without carrying this level, we're looking at a pretty good breakdown, probably somewhere around this area into the 400 range. Well, we got a, well, maybe 410, 400 area is what you're looking at for Tesla. Let's go ahead and move over to Google, which is really one of my top watches. I think Google's, if you look at Google, it's got an amazing uptrend. It's still carrying, it's just barely below the 200-period moving average here on the 4-hour chart. On the 8-hour chart is probably a little bit better clarity on that, but that's, we see there's an uptrend line that's in gold. That means that it's a weekly uptrend line. But we also got if you look, you also got a hammer candle and then a snapback low on a stock that's really been strong. If there's one stock to possibly look at playing to the upside, this would be the one that I would pick. You do on the hourly time frame, you are looking at a downtrend line right through here. That should be broken before you decide to get bullish on it. This one on the 4-hour chart, you will notice over here is your 4-hour chart, right? So you'll notice on this one on the 4-hour chart, there's no signal that the moving averages are stacked. That's missing. And even though the RSI is weak, it's actually not in that oversold position. So this is actually one of the stronger stocks, even though it is down more than the other ones on the day. That may actually create an opportunity. Let's dive into the 4-hour chart, get some better numbers on this. Okay, as you can see, we have actually pivot low points below to support this stock. 300 and around 312 is the next pivot low, and then 310. And that's an entire trading range right through here. And that's an entire trading range right through here that's supporting the stock as we speak right now. So you can see all of this activity right here, that there's a lot of buyers. It's a huge supply zone right here for Google. So Google has some opportunity. It's obviously it's broken down. It's underneath the most of the moving averages. It has to get above this. It's got a this pivot high. But on a day trade, you might be able to, if it comes back to retest this pivot area here, I would watch it. I would actually be watching this possibly for a break to the upside. I wouldn't want to sell this down to the downside because of all of this chop right here. It signifies the fact that it might not want to move very quickly. And that's not the kind of stock that I actually look to trade. Then we have Amazon. Let's move Amazon to the overview of all the charts. Obviously, this is a strong stock on the weekly chart. It's completely back tested its entire daily move. It's back testing this weekly downtrend line that it broke out of back in around the middle of December. Let's dig in now to a overview of the let's dig into the details of the 4-hour chart. In the 4-hour chart, you can see that we also have a snapback low on this one. Every one of these seems like they're hitting a snapback low. We're all picking up a little bit of a bid as of looks like about the 6 o'clock hour. The 6 o'clock traders came in and decided to start buying these stocks. You can also see that this stock here has a huge amount of activity right here. It's right in the chop zone right now. So this one, and then it has some choppy action right here, but also it did have a pretty nice move here. So honestly, this one you could actually look at if it gets below this area right here, which is around this snapback. We'll dig into this in just a second. Or it gets above this area, it's right in the chop zone. Right? Then you look at possibility of down, up, and then down, or possibly it could make some move up as well. But we also do have, it's not going to move a lot, but it'll move enough to make a decent payout for a day trade. Dig in a little bit deeper. It's probably not quite as strong as Google to the upside. And once again, right now it's in a choppy range, so I wouldn't trade this. It is below the 200 period moving average, and it also is it also has that stacked condition, and the RSI is weak, and it's riding that 5 period moving average. Price is below all of the moving averages, as you can see here. And then on top of that, but the slope is of the moving averages is slightly down to neutral. So this one here is not, even though it's, once again, it is the lowest, it's got the worst, look right here, it has the biggest pullback as of the pre-market, but it's really one of the strongest stocks. So it's something, once again, the way the pre-markets, the way the regular trading hours have been trading is that they've been making the pre-market traders pay. So if the pre-market traders drive the market up, the regular hours end up driving it down. If the pre-market traders drive it down, the regular trading hours drive it up. It'll be interesting to see if this is a gap and go situation for today because the tariff information is out there. I think we also have a Supreme Court decision that's due today on tariffs as well. So that'll be something to watch. Let's go now back into a overview of what the markets, what we need to watch for the markets. All right, so here we are, the week ahead, and what is the outlook for the week ahead, and what is the calendar? The NASDAQ is already broken down, as we've already talked about. So the market was closed on Monday, as we know, and yes, today is Supreme Court Opinion Day, and Netflix is on after the bell for the first FANG man to report. I'm actually long in Netflix with a bullish put, and I would love to see it go down to 80 and then add to that. But I think 80 is actually going to be a good buy zone for Netflix personally. but it's my opinion and you need to do your own work. Also reporting this week is Interactive Brokers. Then Wednesday, we have Schwab and Johnson & Johnson earnings. Thursday, Trump is scheduled to speak. It could create some volatility. And the big one on Thursday is going to be Intel. Intel's had some massive runs, so I'm not sure they can live up to it, but we'll see what happens. And then we have these other ones that I'm not really too concerned about. Strategy for this week, watch the NASDAQ close on Tuesday. It closes red again, breakdowns confirmed, defensive posturing is required. I think we're in that state right now. I wrote this up on Sunday, by the way. We're monitoring the 10-year to see if it pushes past 4.25. The silver volatility support is at 71.75, resistance is at 80 to 82. Silver right now is trading at 86. It had a gap up, so it's already surpassed this. And from my Sunday night write-up, Bitcoin must reclaim 95, otherwise it's a bearish setup. Well, Bitcoin has not reclaimed that. Bitcoin right now is trading at 91.3. Bitcoin is trading at 91.3. So that's what I have right now for the market update for you. Have a great day, stay green, and make lots of money. Take care.